The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon at 877-927-6648. And, of course, I followed 2 great hours with Steve Rhodes, just a wonderful technician, very articulate, always wonderful ideas, and trading concepts that he puts into practice. And then we go straight to a next master of the art of technical analysis, Larry Pesavento, the Commodities Hour. Is the Futures Hour? The Futures Hour? Commodities Hour. Futures Hour? Commodities Hour? With Larry Pesavento, and then followed by Daryl Martin and Dave White, Ken Shreve, back right here at 4 o'clock till 6 with Tom O'Brien. So you've just got a full day of technical analysis and discussions. I'm also going to throw in something here, get the den a little bit riled up there, but. Did anybody hear? I kept marveling about this. I heard on, was it Monday? Friday or Monday? I heard a couple of days ago, I read that Congress had gotten a raise. I said to myself, come on, I haven't seen it in a single newspaper. New York Times? No way. A Boston Globe? No way. I asked people from different cities that I know, have you seen anything about it? Nothing. But Congress got a raise. President Obama issued members of Congress a raise while still negotiating the fiscal cliff. So, do you understand when I was talking about how all federal employees getting raises? That is amazing. Sure, they can get a raise. That's not the issue. But at this particular time, to do it so, it wasn't discreetly. It was behind everyone's back. It was what I was saying. You hold up your hand and you keep pointing. I remember, I think I spoke about this years ago. In my youth, in my wild motorbike youth, a number of us were at the beach once, and I looked up. It was a crowd. It was like a Saturday afternoon or Sunday afternoon, just in Cape Town, South Africa. Beautiful beach on Clifton Beach. Just an extraordinary beach. Mountain behind you. Got this beautiful white sand, so white that if you don't wear sunglasses, it is very difficult to see. Sun shining, glistening is the word. Glistening over the ocean. Huge waves, just huge. Not like Hawaii, but pretty darn big. And I pointed up to the sky. I just pointed and started looking. Then my best friend with me, he looked up and he looked. I said, just point. I say, he points. And then a couple of people came around. We had about 200 to 300 people looking up at the sky. And then I said, okay, let's just walk away. And then we just walked away. We went off to another beach. There were 4 different beaches. And there were still these people standing around and pointing and seeing things. It's the sheep factor. It's the inquisitive factor. So this is really quite interesting that you point up in the sky and all the time you're doing something else. That's, I don't know what to say. I don't think that was necessarily democracy at work to suddenly sneak in. It should have been discussed. Because then if they discussed it, they'd never get the raises. But I'm not sure that was a reasonable thing to do. Anyway, I thought I'd throw that out. May as well throw it out because it's a done deal. That's the way things work. So let's go on with the story. And the story is that the Dow, this is incredible. This is fabulous now. I'm going to show a chart in the Tiger Technicians Hour, and this will be right on channel 1. But they archived on Channel 11, all my shows. This is with a white background chart. Let me just show you a couple of things here. The S&P had an extraordinary move from 1382.25 on the futures just 4 days ago as a low and screamed to a high yesterday of 14.58, and today is only down 25 cents as we speak. That is fantastic execution of a result of a particular, climb a wall of worry. We always talk about that. Well, certainly that was climbing the wall of worry. Now, here's another thing I'm going to add. I had a very interesting, a tiger sent me an epistle on just discussing all the aspects of the different bills and things that have come up, and the different areas that need to be dealt with, how they could be dealt with, looking at it politically, etc. And it's been one of the hosts has responded very eloquently. Both of them are very, very good points of view. And I must say, I'd like to respond, but maybe I'm just more cynical. I don't know. But when you're looking at, it's the same with charts. Larry's show is all about trading what you see, and I really believe very strongly that in the formulas that we look at, whatever they are, in looking at stocks, if you are looking at certain things, you've got to keep your eye on the prize, not just on the ball. What is the prize? In other words, are you looking at in this case, the ChapmanWave? I had a request in the den. Bob asked, Basil, the NQH 120 minute made a trough E at 1 to 1272 expansion with text turning up sharply, which led to this rally. What a powerful combo. If I had been trading during the holidays, I would have taken that trade to the upside. Might not take the holidays off this year. So this is what I'm looking at. The NQ. Now, this is with all the news about Apple not doing as well as it had been. It had a great move up, but it's, it's not the stock du jour in terms of moving to the upside, or it hasn't been since it made that major top in the 705 area. Well, if you're listening to that and using the Qs, then you say the NQs, how could they have a move like this? Well, the NQs, that is the E-mini NASDAQ 100 March 2013 contract, went to a high at peak C in the ChapmanWave at 2742.75, and today's high is 2746.25. So it's gone to a new high bar. Let me just double check here. In leg D, and that says right here at D. And now there's a whole bunch of things. Because so many people responded to my special offer of the CD introducing the ChapmanWave methodology, where they get a month of the opening call. So they pay half price for the CD book, 470 slides, 27 chapters, 28 chapters. And then they also get my opening call. Well, I'm doing my very best to, as I always do, but a little bit more now because of the numbers of people involved, to explain everything. And I spend a lot of time on my charts explaining that this particular technique is in chapter whatever it is of the CD. Well, right here, there's a technique that I use. It's called, that is not in the CD. It's something I discuss. I teach in my Master Trader series, but I had been mentioning it so that it becomes part of the learning, the educational aspect. And it's called the squash. And it's a particular technique between the MACD and the stochastic. Well, this squash invariably gives you a huge move up to B and then C, and then it stalls. So the torque of the stochastic gives you that impetus to move higher, and then the momentum of the fast-moving average of the MACD takes you to that inevitable leg D. That's exactly what we've got. What a beautiful example. Now, you also had a little bit of an example like that in the daily NQ from the low of, this is the March contract of 2502 back on the 16th of November where the big rally started. It went to peak ABCD. Now, that's what you want in the ChapmanWave. What do you want to do? You want a technique that can take you. It's a forward-looking technique. It takes you to a peak A, then a B, then a C, then a D. at these where you've got to be careful because you can't have the sharpest pullback. Well, lo and behold, it takes you all the way to 2687.50 on the 19th of December, and then it plummets down to the low of, and the fears of the fiscal cliff. Fiscal cliff. Remember that? They are holding up the sign. Everywhere you looked, fiscal cliff, fiscal cliff. Everywhere I went, people said, oh, market, you're involved in the market. What about the fiscal cliff? And I kept saying, if the media and the public are talking about it in such vocal terms and with such recognition, it's just, I'm expecting a pullback, but there's no fiscal cliff as far as I can see yet. It's when everyone says, oh, we've resolved it, that's when you got to be careful. So what happens is you pull back, fiscal cliff talk, you go down to 25.80 on the 31st of December, and in 1, 2, 3 days you spiral up to the high of today of 27.46.25, and it's still leg E. I'm calling it E for now, E/A. Why? Because the stochastic's still only at 56%. This could be an extension of the previous buy mode, or it could be a brand new buy mode. If I have time, I'll talk a little bit more about that later on. Let's go through the numbers. So peak D is formed in the area of resistance that we're looking at in the 120-minute chart. It could go a little bit higher, but at this particular point, a chunk of the work has been done, and it should take a little time out to consolidate, to re-energize. So this peak D formed will be in an area of another 1.1272 expansion. See, I love the way you can put, when I talk about techniques, I say if a technique is robust enough, it'll accept any other technique to add to it. It becomes complementary, and that's exactly what we're looking at with the Fibonacci's. So, so now let's look at this. We've got the Dow. Now let me run the numbers, and we're going to take calls at 877-927-6648. Let's go through this. The Dow Industrials, I've made a new leg G/A. That's all the way. G, either brand new G, brand new A, or it's the old G, which is going to fade and fizzle, and that's that single leg up that I started to talk about yesterday in the ChapmanWave methodology. That would say that if there was a decline underneath 13,180, it could possibly become a single leg A up, a false breakout, you could call it, and you're going to come down and retest the 200 moving average at 12,959. I think that something else is going on here. If the volatility index plummets as it did, all the way down to a lower low today, even at 14.46, that is buying pressure, and that buying pressure says that we should make higher highs. And I've got a pattern that I showed my subscribers that we're going to be following, which is one of the reasons why we added we added one long today. We're trying to add another long. And we also have a short. I don't believe that you should be afraid of being short weak areas. You can have this bifurcated market going on. You can be short and you can be long. So the Dow itself, so based on the volatility index, which is actually based on the New York Stock Exchange, we're looking at the Dow having support, buying support, and that buying support there says on a short-term basis, 13,222 is major support in the 9-period moving average, but probably 13,320 to 13,280 or 70 is the area of major support over the coming few days. Oh, already got a break. Got a break and a ton of questions. So I'll take questions both in the den and on Tiger on the telephone. 877.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. I knew I opened the barn door. I've been getting emails right here, left and right, about this whole, left and right, I should say, all right, left, about what I was discussing. I was just mentioning, I just thought, the pay raises snuck in there real quietly. I deserving or not, that's not the issue. It's having snuck it in. That's number one. Number two is I'm going to slowly, if I can, I don't really want to waste time talking about politics because I really believe it's a waste of time most of the time, because there's an agenda that goes on, and it is the sleight of hand that really does the magic. And most of the time we think certain bills are being passed. In the end, it is the little dotted I's and the crossed T's and the little fine print that becomes bigger. The font size gets bigger for those little asterisk insertions that come in there, and eventually they become almost primary to everything that was discussed 5-10 years ago. So that's the way I see it. But I love reading about it. I love hearing about it. Let's go straight back to the stock market. So I had a quick question about SDX, Seagate Technology, computers, peripherals. I looked at this chart. I love the chart formation. I just thought to myself, what are they doing that is so good in this area that's such a difficult area? So I never really got, even though I got a beautiful buy signal, I even got that squash that I was talking about between the stochastic and the MACD, which took you to C, and now it's gone to D. But this is the pattern that I drew a little while back, and it's the left side, right side pattern, and it comes, in this case, in a cup. It can come in an arch or a cup formation. The cup formation, for those, this is what I'm going to be doing all the time. Chapter 15, for those of you who bought my CD introducing the ChapmanWave methodology, slide 310 onwards. That's where you look at it, and it shows you the cup formation from the left side to the right side. But this, in this case, the plumb line, the point that you're going to measure from the left to the right is different. It's not at the low, and that's what I teach in my classes. In the CD, I couldn't get into it too much because it was just part of it, 470 pages. But in fact, how do you identify the midpoint is very important. How do you use the inside wedge, the ChapmanWave inside wedge, the diagonal rising or declining line that gives you your target line for the left side, right side, as a big focal point. All right, anyway, so we've gone to the left side to the right side in 3 bars, 1, 2, 3, 4 bars quicker than I expected, and it went to the high of 32.25 with the high of the 25th of September, comes down to 24.90, and yesterday it went, in 4 days early, it went to a high of 32 round number high, and today's pulling back a bit. If that 32 round number high is taken out, look out, 32.25 is next, but this is peak D. If there's no new high today, now it's 32 parallel high bars. So that doesn't mean anything. This is still leg D. The stochastic's at 87% and the MACD is good. So I think it is going higher. I like the chart. And if you're using the ChapmanWave methodology, this is leg D from the low bar back in November, late November. And even more important is that the weekly chart I've seen more and more of these patterns. It's a funny kind of a pattern. It's like a W that doesn't get back to the high, that U doesn't get back to the second U high. We're going to watch that closely. But so far, the MACD, this week, it's Thursday already, the MACD is turning positive and the stochastic is rallying strongly. So I see this as a very nice trade if you're in it. I believe this person's in it. And more importantly, if it gets into the inverted wick, the Roman candle wick of the month of August, if we get anywhere into the 33.28 to 33.35 area, there's every chance that it's going to retest the 35.71 high. It will fail if it closes under 29 in the next week. Okay, so I wanted to get to that. Next question was, yes, I wanted to go through the patterns. The S&P SPX.X, very powerful leg. Is this leg F, old F, or is it brand new leg A? We won't know, and I'm not going to presuppose anything. Why? Because the MACD in the weekly chart still has to turn up positively. Stochastic is rallying strongly. The monthly chart is fabulous. There's just nothing to complain about in the monthly chart. So I'm just going to let this play out, and what I am going to say is that I have a chart pattern that I've been working on, that I did start introducing to subscribers today. I have a chart pattern that gives an outline that says that the Dow should go to INDU. It should go towards the 13,661 level, with 13,580 as the first resistance, and that would come in early next week on the 9th. And then around about the 13th, 11th, I think it is, the 11th to the 14th, you will get the level to test 13,661. It could happen earlier, but this is the pattern that I'm looking at. It'll all break down if the Dow closes under 13,100. So I'll be right back. Basil Chapman, 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, and this is the Tiger Technicians Hour. I'm just quickly going to do something here. I wanted to do it yesterday. I never had time. I'm going to run all the numbers, and then what I want you to do is, let me just go IBD 50. 1 second, I had it printed out. Don't know where I put it. Doesn't matter. I've got it right here. There you go. Okay, and then I'm going to run some of the top IBD stocks, Investors Business Daily Top 50. And I'm going to go through a couple of things that I want to also explain. So here we've got it all set up there. Now let's run the numbers. So the Dow is up 1.5 at 13,450. Now my point was, when I was talking about the market and talking about the power of the move and why my preference right now is to think this could be a brand new move to a leg A. And that's my thinking here, is that I've got to give that a preference because the volatility index, the buying pressure, has just collapsed completely. It's under 15. It's in the 14s within days, going from 23 down to 14. That is I think Larry had pointed out yesterday, one of the sharpest moves to the downside in percentage terms that we've seen in quite a while. So here, this is what I'm looking at. The Dow gave you the parameters, but if you look at the S&P, the SPX, it's making a new recovery high as we're talking at 1464. That is really important because why? The previous high was 1474.51. And if it takes that out, I have no choice but to say it is so unusual for a monthly chart to make a leg G when all the technicals are strong. I have to consider that's leg C. Do you realize that if it's a leg C, I cannot get a leg D to start? This is January. So it takes all of February to make a peak, meaning that there's a lower high bar in January. Then it takes all of March to break above it. And if in January there's 1 penny above, if in February it goes 1 penny above January's high, that means that I can't get a leg D for 2 months after that, because you have to wait for the full month to complete. So to me, this is really positive. I love what I'm looking at right now. I don't feel I'll see if the short position that we have is going to get taken out. If it does, that's fine. I made a big mistake yesterday. I knew that if a particular short which we had was taken out, I should switch immediately to the long side. And for some reason, in my thinking this morning, I decided I would go with a much the difference between a stock that was 100 and at the time it was 151 or 149, $152, and the one stock that so far we're in that I added this morning at $3.15, I would say that that's a big difference. So my thinking was on a percentage basis that the bang for the buck is probably going to be in the lower priced one, but that's really not the thinking. Is go with price, go with the action, go with the. I should really have taken the switch. There's still time to do it because it's going to act very well in the shorter term. So I'm looking at charts and I'm saying, wow, this is very interesting. You have Ford. I've been speaking about this for months. I'm saying, why are Ford and General Motors holding so well when we're in the worst, the fiscal crisis is the Great Depression? Something's wrong with this picture. It's one of the reasons why when I speak to people and ask me about markets, I say, I could really give you a good reason why the market should go to, the Dow should go to 15,000, 16,000. I could give you another reason why it should drop and it should go down to 9,000. But my thinking right now is that if bonds, which are being propped up by the Fed, if they are being held up falsely, artificially, my thinking is they should be coming down even deeper, but they might not. They might be like the dollar, which is trying to rally and just keeps beating down. There are a lot of things here that are positive. The New York Stock Exchange, I'm going to diverge for a second. Look at this. Breaking out of a symmetrical wedge in leg C, a nice leg, not a very strong leg C, but the stochastics at 89% of the MACD is nice. It's good. That's the New York Stock Exchange, over 2,000 stocks. The weekly chart has just smashed through the resistance in the V-shaped formation, and the daily has got this leg E, if it's old leg E, or brand new leg A. So I'm looking at this and I'm saying, wow, IWM, all-time highs yesterday, all-time highs today. Oops, not all-time. Yeah, all-time highs today. What's with that picture? The IYC, which is the IWM is the Russell 2000. The IYC, right as we are speaking, is at making leg D in the daily 89.08. It needs one more penny and it makes leg D in the daily. It's screaming in the weekly to say, hey, you can count any way you want, but this is really new leg C to the upside. And the monthly is in leg D, but with very strong technicals at 93%. The IYC is the United States Consumer Cyclical iShares Trust. Yeah, I don't know what the politicians are talking about all the time. They're always on the wrong foot. I don't care which side you're on. They're both of them on the wrong foot. They're looking at the wrong thing. There has been an incredible recovery here. That's what I kept saying. Why doesn't Obama, the first debate, why didn't he say we wanted three things? We wanted to get the housing market on stable footage. We wanted to get the bank sectors done. We wanted to get the automobile sector coming back so people were buying American cars. That was one category. We wanted to lower interest rates. That was another category. And the third thing that I'm waiting for is for the jobs numbers to improve. And you remember the very next day, the jobs numbers, they made a figure up of 8%. Well, it went under 8%. It was simple. There really has been a recovery here. And that's one of the reasons why I think you're looking at gold and not doing what you would expect. It should be soaring right now, and it's not. So let's go through the numbers. We've got gold right now down $19. Look at that. Gold now down, $10. The DAX is down 19. Gold is down 10 at 1678. I believe that there's a chance that we are very close to some kind of support in the gold contract for it, at least to have a bit of a bounce. But maybe the bounce has been, I'm not sure yet. All I'm saying is that looking out, I think that gold has further to go to really form the kind of the ictus, the bottom V-shaped bottom that I'd be looking for to have another powerful move to the upside. It needs time. It's had a spectacular move. Silver is down. Silver is down 50.57. It's at 30.95. Platinum's up 6, and copper is at minus 150 at 372. But that was a very nice move in copper yesterday. H, you remember we were talking about it, and I said I would look for one of our tigers. I'd look at the commodities. Well, high-grade copper, I've got this as new leg B. Yeah, it could turn out to be G, but I'm calling it B for now. If I'm wrong, I'm wrong. But until copper, this is the contract, the March contract, can really decisively the high so far has been 3.759. If copper is able to get anywhere into the 3.78 area over the next week, that's going to be very good. So I'm liking the action of copper here. It's not great, but I'm liking it. And you've got bonds, and bonds are down 30 seconds. You've got bonds down 30 seconds. Let me tell you something. The TLT has gone to lower lows. The weekly chart has made that pattern I call the dreaded H. Remember the dreaded H? Well, it's actually a very big arch formation, but it made the dreaded H and then an M formation, a little lowercase m formation. And if it breaks 118.05, 118.84 is the weekly low so far. If it takes that out decisively, then bonds are just going to, I've got that alternate count that says there could be a peak D. And if you look at the TBT, which is a 200% long, the ultra short Lehman 20-year Treasury bond ETF, that the TBT is in very strong, here again, like the market. Is this E or is this a brand new leg A? This one I have to call E right now because just because of the pattern. It'll prove itself if it, at 66.60. If it pierces 66.35 and goes to 66.80 to 67.20. Let's go to our first corner. We got John in Philly. Hi, John. How are you? Was that the telephone that just went? Oh, John, I'm sorry. I didn't see you until right now. John, if you want to call back, I think John wanted to talk about the SOX, which is the, let's go to the SMHs. SMH, I think that's what you want to talk about. The SMHs, I haven't got a chart here. Let me go to the black background. SMHs, that is a semicon. I don't believe it. I'm not sure why this happens. It's just very, very upsetting to not have they're there somewhere, but I'm not hunting for them. They're just not there. It just takes me a second to do them. So the semiconductor index right now has gone to, in the monthly chart, a peak. This one always has very sneaky peaks. They are hard to read sometimes. Let's see. I'm going to call that E and F. And then I'm going to treat this is going to be very interesting, because if there was a low, 25.79, 25.78, 25.92, great. So this is a start of a new move up, and it's really important because the semiconductor index, I hope John is able to call back, the semiconductor index it's really important. I got to call this G/C. G/C. Let me just double check here. I'm going to explain to you what I'm doing. It's very simple. 35.49 was the high back in May of 2011. The starting point was in the monthly November of 2008 at 12.95. Goes to peak A, B, C, D. D takes a little bit of a breather, but the MACD holds. So then goes to E and F. Starts a new move. At 25.78 in September of 2009, goes to peak A at 32.74. Now the previous high was 35.49, and this one goes to 36.17. So is this old G, or is this brand new C with a potential D coming up if it appears as 36.17, which is really not that far away if we are starting a new move to the upside? So the question there is that the monthly chart, having gone back, remember this is the chart that went to, this was the index. When do ETFs invariably start? They start when the stocks themselves have had a huge move, and then State Street and all the different people think, okay, this is a great time to be making an ETF or an ETN based on the key stocks of that particular sector, and invariably they do it. I remember when the let's see, what was it? It was the OIH was always there. Was it the home builders, and then they brought out an ETF? I remember each time that's when they discussed these things. So now what you got is after the big opening day back in May of 2000, opens at 78.44, 67.20 was the low. It screams up to $100.20 in the 30th. No, in June of 2000. So it makes a high 3 months after the S&P made its high. And then it plummets. It plummets down to $15.16, has a run of A, B, C, fails, has another run of A, B, C, low, and fails. Finally makes a D right there. D is on July of 2007, and then it makes a lower low, and it goes all the way down to $12.95. So now it started this brand new move. So all I can say is that at this particular point, the monthly is in a rectangle formation, trying now to head towards the higher level, which is in the 35, the low 35 area, and it's at 33.60, the SMHs. So going on, the support means that it should not break below this candle right here of 3 months ago, 30 round number. If it closes below 30, be careful because it's making the H goes to an M pattern. So far, it's very positive, holding above the 9-period moving average. Now we go to the weekly chart. The weekly chart, let me just get you started over here. We can always identify the low bar, 25.79. Nope. 25.78. That's the one, 25.78. That's the one I just put the up arrow on. So it goes peak A. Now, all I do is count the peaks. Peak A, peak B, peak C, and peak D. You see, the requisite of the Chapman wave is to get you from a buy signal to a buy mode to at least a peak D. Then the wave goes to A and then to B, even the anticipated C and D. That's when it flashes a cautionary light. Look at this, the the M formation in the stochastic fails, on balance volume turns around, the fast moving average of the MACD turns around. That's when it flashes a cautionary light, but all you got to do is make your stops real tight. It goes where? To the 200 period exponential moving average. And then the low is 29.57. 29.56, so that's the low, and it screams to an A, and that fails because it comes all the way back, comes to an A minus, and now it's started a brand new A to B very quickly. I like that. So I like the semiconductor index. Wow, I must speak to my friend, the semiconductor man, because he's seeing something very different. But of course, you can't just take one part of one industry and talk about it as if everybody's in the same position. EF, is this G or is this brand new A? That is the question. So I'll put a G/A, and then we'll discuss it in a little bit more detail and what I would expect. Folks, Basil Chapman here. We had John in Philly. He dropped SPX. Oh, well, I'm pleased I did the semiconductor index because it's acting really well, considering that I'm hearing reports that there's a lot of slowdown in the semiconductor industry. The price is good. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success, and it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. We're back. Final segment. And just real quickly, we're going to go to John right now. Hi, John. How are you?
Hello, Basil. Happy New Year to you.
And a Happy New Year to you. Can I just take 1 second just to say that I promised I would look at Priceline for one of our callers yesterday. And I said, be careful because it's this arch formation. Priceline's moving up. It's up 16 at 655. You've got to be real careful because that whole area, it must not, if it breaks above 679.23, especially 670. If it goes above 670, the round number that was there, it could go higher. So just be real careful that I wouldn't enter the short. So let's go. John, you would like to look at?
I have a very specific ChapmanWave question for you. on the monthly chart of the S&P cash, the SPX, and specifically, Basil, this question.
Yes.
If the S&P exceeds the September high of that 1474 mark,
yes.
If that surpasses and makes it a new high, what is it about your methodology that labels that, therefore, a leg C and not a leg G?
There are a couple of things. When I'm getting to a leg G, invariably it is either what I call a right arm extension of my CD introducing the ChapmanWave methodology. That is chapter 21, starts at slides 362. What would happen is that if it starts to extend above this leg, this 1474 level, if the MACD is still holding absolutely steady at 86%, or it'll probably go a little higher to maybe 88%, I have to be looking for either a divergence where one of the indicators, either the MACD or the stochastic, is giving me a failure signal immediately after, when there starts a potential peak in the next leg up. In other words, I call it G/C, giving great preference to C. Why? Because there's always a magnet of the... There's a memory that people have. Just real quickly, when you've played sport, and you know that when you hit a ball, whether it's a baseball or cricket ball or soccer ball or football, whatever it is, if you're throwing it, in the back of your mind, wherever you're running, you have a visualization of the person that you should not throw it to. So when you throw it to the person you shouldn't throw it to. Unless you're a professional, you learn to throw it away. But it's really hard because there's a magnet of that in your peripheral vision. There's the magnet of that goalpost or whatever it is. Well, the goalpost in this particular point is for fund managers to say 1576.09. They won't remember the 09. They remember the October high of 2008 of 1576. That's number one. Number two is that you know the chart that I've been showing for quite some time. I hope I can find it real quickly. There, I've got it. The S&P chart has broken decisively the pattern. In fact, I'm taking it away now. I only put it in to show what would happen if it started to fail. It has broken the potential for a down channel, and it says that it still remains decisively in an up channel without any indicators, just channel lines. And that channel line says that there's a magnet that goes towards the previous high of 1474.51. Oh, it was 51. And if it takes it out, then the next resistance line will be somewhere in the 1530 to the 1520 area. So I'm looking at this and I'm saying, if bonds are pulling back, if the volatility index is holding strongly in a buy signal, if the IYT, the iShares, or the transportation iShares, Dow Jones iShares Transportation Average Fund, is breaking out of the symmetrical triangle and is broken above the previous arch high of 96.22, in what looked like it was about to make an arch formation, but it held right at the top of the high-level consolidation. It says it's inner strength, and that strength says that it should test the 101.60 level on the IYT. So far, the month has barely begun. So many factors are pointing to a test of upside resistance rather than the downside. I hope that answers you.
Thanks so much. It does.
Thank you very much, John. Folks, Basil Chapman here. My service is the opening call. Go to the front page, check it out. My CD is introducing the ChapmanWave methodology, and I'll be back tomorrow. Stay tuned for Larry.